On this, we're joined by Amina Ali. She's a business editor at the Daily Sabah. Welcome back to the programme, Amina. First of all, how are rising global energy prices due to the US's war on Iran impacting Turkey's export profit margins?
Well, it's inevitable to say that rising energy prices are in fact indeed impacting production and transportation costs for many companies, not only in Turkey but elsewhere in the world. But we are seeing that the latest figures shared by Trade Ministry yesterday show that Turkish exporters managed to sustain and even increase exports in this difficult geopolitical environment that has tilted not only energy routes but trade export routes as well. Exports have increased in June and July both to around 25 billion US dollars. It is early maybe to say that this is a new norm or a new standard for the Turkish exporters, but in the past this figure stood around 22 to 23 billion US dollars. So we see that the momentum that there was in the country's exports over the past years continued in most of the months this year as well, and that exporters are boosting their export margins despite this difficult situation, as I've mentioned. In this regard, it's important to mention that Turkish authorities are working to diversify their countries that they are exporting to. They are more focusing, for example, on far and distant countries and new markets, because some of the main trading partners and key trading partners that Turkey has in nearby region have been impacted by the crisis due to Israel-Iran war. So I believe that there really was a positive momentum in exports in past couple of months. And as figure shows, this momentum is likely to persist as well.
And European markets are showing the strongest demand for Turkish automotive and chemical exports right now. What's behind this momentum?
European Union is traditionally top trading partner for Turkey. This has been the case for years. Leading European economies and large countries in Europe, such as Germany, France, and Italy, are leading in this regard. Germany is always the top trading destination for Turkish exporters in general, but also in automotive sector. When we look at the chemical sectors, there are other players here as well, maybe Netherlands, Italy, and Spain. Also positive momentum in relations with some of the countries in the EU, such as Spain, Italy, and Poland. In recent years are also boosting demand for Turkish goods in this region.
Meanwhile, inflation is also showing signs of easing. Can the central bank reach its target while holding rates at 37%?
Turkish central bank has for some months now kept its main policy rate unchanged at 37%, citing mainly geopolitical frictions and concerns due to Iran war. Here, I think it's important to mention that this 10% or even like 5% target that Turkish central bank has is its medium and long-term target. It's the target that the bank hopes to achieve in next 1 to 2 years. So due to all the tensions that we have in region and mainly energy prices that have been fluctuating heavily over the past weeks and months, it is unlikely to expect that these targets can be achieved this fast. It is possible, but challenging. The difficult trading and geopolitical environment is impacting the decisions of many central banks around the globe, not only the Turkish central bank. We have seen the steady, fall in inflation over the past months. In June and July, it decreased again. There has been some, risk at the start of the conflict, but we see that this inflation trend is being supported by the decisive, stance of Turkish Central Bank. And I believe as long as the policy is kept intact, it's likely that inflation will continue its downward trend, and we can then be talking about, curbing the inflation further and having these lower figures, including maybe, single-digit inflation in next years.
Amina Ali from the Daily Sabah, good to speak to you. Thank you.
Thank you very much.